first step when you're purchasing a home? A lot of my first time home buyers, they ask me this question, and a lot of times they're very anxious and nervous. It's not a process to be anxious or nervous about. As long as you have the right set of professionals behind you, we'll help guide you through the process. So, how do you purchase a home? So, the first thing is going to be to sit down with a professional, right? A mortgage loan officer, in order for us to determine your eligibility. So, whether we're doing an application over the phone, we sit down face to face, or I send you the link to your email for you to complete the application at your leisure. Whatever it is, we have to collect a bulk of your information up front. So that's going to be your name, your date of birth, your social, your residency for the last 2 years, your employment history for the last 2 years, a rough idea of how much assets you currently have. We want you to know if you had any bankruptcies, foreclosures, any short sales. Are you paying any alimony or child support? Have you been delinquent on any federal debt? Any judgments or liens? Are you suing anyone? Is anyone suing you? There's a laundry list of items that we have to go through in order to make sure that the eligibility is still going to be intact when you're purchasing a home. So that application process, it'll take you anywhere between 20 to 30 minutes. And if you've submitted the application online, I give you a call. I want to make sure all the information had pulled through accurately. So we're going to breeze through the application just to make sure everything's still accurate. I just want you to confirm that information from you, because we didn't go through it together, right? Face to face or over the phone. So once that process is completed, what we're going to do is a credit pull. So that credit pull will entail me reviewing 3 credit bureaus. That's Experian, TransUnion, and Equifax. So Kristina, how do you determine my FICO score? Well, it's not the highest score, it's not the lowest score, but it's going to be the score that falls right in the middle between all 3 bureaus in order to determine your FICO score when we're with the mortgage lender. So whatever that score may be, whether it is from any varying of those 3 bureaus, it doesn't matter. Whatever score falls in the middle, that's the score that we're going to use for your approval. So if you are a husband and a wife, both qualifying on the loan together, and let's say husband's FICO, when we do review it and the score that falls right in the middle, it's a 700. But his wife's FICO, once we review it and the score that falls right in the middle, is a 680, right? What score are we going to use for eligibility? It is going to be that 680. The 700 does help with the approval. On a traditional approval, a lot of times we are going to use that lower FICO in order to determine eligibility. Some of the lenders that I do partner with, they do allow me to use a blended FICO. So it does combine the 2 FICOs in order to generate just 1 FICO. But again, that's going to be on a case-by-case scenario as to where maybe that situation might make sense for us to do that. So once we review credit, right, I let my consumer, my buyer know that, hey, this is going to be your FICO score moving forward and what we're going to use for eligibility. Then we go over that report together. And I feel that that's going to be the really important part, because I've had clients not know all that's reported on their credit report. So I like to go through it. Hey, car payment this. Hey, this small credit card XYZ, right? Are you familiar with this collection account that did show up on credit? What about this late payment that you had 24 months ago? We want to make sure that we're on the same page when it comes towards your finances. And I feel that's a very important piece. It's just transparency at its best. So once we go through the credit report together, if there's any issues or any errors that we need to fix prior to that, then we make sure those are all done. You've now been pre-qualified. So technically, there's going to be 3 types of approval: getting pre-qualified, getting pre-approved, and having your file reviewed by an underwriter, right? Phase 1 is completing the application and allowing us to pull credit, the lender to pull credit. You've now been pre-qualified, and we can go over some rough numbers for you. But where we really want you to be is pre-approved. That allows us to take a look at the full picture, and we're going to validate everything that we just went over on the application. So your income, right, your assets, and any other supporting documentation that I may need. If you've had a bankruptcy that's now been seasoned, I want to see those discharge paperwork. So we need a complete package for you before you can start shopping. And we want to make sure that you've done your due diligence in the process for us to issue an approval. The last thing we want you to do is start shopping for a home and there's an issue right in the middle of contract. That's the last thing that we want. So we do our due diligence up front. So once we've collected all of your documentation, we've packaged everything together. I've reviewed it. I've determined your income based on your W-2s, maybe if you're self-employed, your tax returns, your bank statements for 2 months, a copy of your ID, whatever it is, right? The full big package. We've reviewed everything. Then I'm going to go over a few important pieces of the mortgage, right? It's going to be your mortgage payment. I want to make sure you have a full understanding as what is your commitment as a buyer once we close on this property to make sure that that's affordable. So we go over your comfortability. And a lot of times I let my clients know, first time home buyers or not, hey, how much have you budgeted for the mortgage, right? Because we are going to make an assessment for that. So what we'll look at is your debt to income ratio here internally. And that's going to be a combination of all of your liabilities that's shown up on your credit against the mortgage payment. And we're going to divide that against your income, right? In order to determine what's going to be your eligibility for approval. So that's what the lender uses. And on top of that, the lender will use your gross income. We're not going to look at your net income. It's going to be your gross before any taxes or exemptions are taken out. So that helps increase your buying power. That's a plus, but your true financial situation may actually vary. So your take-home income is really what you live off of. So I want you to make an assessment and say, hey, based on my take-home income, what is my family comfortable paying every single month? And that's where we work together on that, right? Because I don't want to overextend you and put you in a position where you're house poor or you're not going to be able to afford the mortgage. That's the last thing that we want. So we go over this information together to really nail down what's going to be that number for it to make sense. And then we can work from there. You tell me, hey, Kristina, I want a mortgage payment of X. Then, okay, well, a mortgage payment of X will afford you X amount for your property. Are we okay with that? Or can we push that a little bit? Or, hey, you know what? I'm firm on that number and that's all that I can do. That's okay, right? So that's something that, with my one-on-one with my clients, that we make sure we go through that process together. So once we've gone over the mortgage payment, your cash to close, what's going to be your estimated commitment at closing? Because your closing doesn't just entail your down payment. It's going to be a combination of your down payment plus your closing costs. And your closing costs can run you anywhere between 2.5% to 3%. It just depends, right? So that's also something to be made aware of. And do we have enough sitting in your savings and our investment accounts or checking account in order to satisfy that at closing? So once we've collected all the documentation, once the application's been done, documentation's been collected, and we've gone over the numbers and make sure they all make sense, then I can issue that pre-approval letter. So that pre-approval letter is going to be your golden ticket. It allows you to begin shopping for your home, right? So at this point, if you haven't already, it's going to be time to select your realtor partner. Whether you need help, I can always pair you, give you a referral for a realtor, or you've selected one already, perfect. You're going to give them, and I can also send it to them via email, do a three-way email between all three of us, your pre-approval letter, right? So that's going to allow them to know, hey, John's been pre-approved for X amount. We're going to start shopping at that price point. And then from there, once you guys find your perfect property, you will start submitting offers with your realtor. So generally, finding the perfect home, that can take anywhere between 2 to 3 weeks before you're in contract. So what does being in contract mean? So basically, once you've submitted an offer through your agent, the seller, right, will agree to say, hey, I agree to your offer. They're going to sign off on your contract. So once both parties are in agreement that, hey, I'm going to sell it to you and I'm going to buy your house, then we can begin the process. Now your realtor, what they're going to do is open up escrow. So what does opening up escrow mean? So it's going to be with title. They're going to be the third party, unbiased party in this transaction. So they're basically going to hold all the money. So what you'll do is submit your earnest money deposit into escrow. So generally that earnest money deposit can be, anywhere between 1 or 2% of the purchase price. Whatever you and the seller agree on, that's how much you're going to submit to title. So that earnest money deposit is basically saying to the seller is, hey, I'm a serious buyer and now I have a little bit of collateral, some skin in the game when it comes towards this purchase transaction. Because the seller, his skin in the game or his collateral is going to be the property, right? So now that you have this earnest money at title, there are a few things that we have to make sure are done up front in order to keep your due diligence period, so that way your earnest money can be applied towards your closing costs and or refunded if things inevitably don't work out. So your earnest money is, again, your collateral. So it's going to be very important once you're in the loan process for us to meet all of our loan contingencies, okay? So generally we have like a 20 to 25-day loan contingency. And what does that mean? That means throughout that loan contingency, we have to be diligent in order to make sure that we're going to secure in that approval. So if for any reason, when I ask you, the buyer, for documentation and we're lagging and we can't get it to you right away, Kristina, oh, we're on vacation now, whatever it is, then our due diligence on our loan contingency is ticking. So the moment that we're outside of that loan contingency, what happens is that if something were to happen with the loan, it goes south, whatever reason, we can't proceed forward because we didn't get documentation timely from you, your earnest money deposit, that can become hard. And that can now be issued directly to the seller because now we're out of those protected dates of the loan contingency. So it's going to be very, very important when I call, my assistant calls, the processor calls you, that you answer right away, so that way we get what we need up front, because we're also trying to protect your earnest money deposit, right? So there are loan contingencies and there's also appraisal contingencies, and it's going to be the same thing. What we're going to do now that we're in contract, we're going to send you out the disclosure package. This disclosure package will not have your final numbers quite yet, but it'll allow you to take a peek at some of the figures that we've already discussed in the pre-qual, pre-approval process to make sure, hey, everything's still good? Okay, perfect. Go ahead and sign that for me, because we're going to work on truing up these figures. But for now, right, this is going to allow us to move forward in the process. And within that big package of disclosures, it's going to have your estimates and authorization forms, some government forms as well, just to make sure all the information is true and accurate and you're signing off on it. But in addition to that, has your intent to proceed, right? We generally need that in order to order the appraisal. So once that big disclosure package has been signed, we're going to send you out a link in order for you to go in and submit payment for the appraisal. I will call you. Hey, John, we just sent you thank you for sending your disclosures. We just sent you the link to go in and pay for the appraisal. Please do that as soon as possible. Because again, we have a certain amount of days that we need to make sure that the appraisal comes back in at value. If the appraisal doesn't come back in within those appraisal contingency dates, now we're out of contract on that, right? Now the seller doesn't have to negotiate with us on the appraisal if something happens or it comes in short. Now the seller doesn't have to do all the repairs. You can just back out of the contract, right? So those contingency dates really protect you as a buyer, but we have to move very diligently and quickly to make sure we're maintaining our dates, so that way you're protected and so is your earnest money deposit, right? So now we've ordered the appraisal. That came back in. Your properties came in at value. Congratulations. Excellent. You're also going to do a home inspection and the appraisal, right? What's going to be the difference? The home inspection just makes sure that the AC is blowing cold, the stove is running hot, right? You want to make sure the nuts and bolts of the property is up to par. You pay for that home inspection outside of closing. We don't see that, right? As a lender partner. That's just to make sure your due diligence for that property is up to standard for you. And then we have the appraisal, right? What does the appraisal do? The appraisal determines the value of the property. And depending on the loan product, there could be some things that are specific that need to be met. And maybe we need some repairs to be done prior to you closing. It'll be noted on that appraisal report. So now the appraisal, it came back at value, inspections looking all great. Perfect. You've submitted all of your documentation in order for my processor and assistant to get your file back into underwriting for us to issue that approval, right? And in the process of this, right, we're also going to issue your closing disclosure. The closing disclosure is going to be very pertinent. It has to be sent out and it's very time sensitive. So when we send those documents out to you, please go in and sign them, right? Because you could hold up as well the process if these disclosures are not signed timely. And in the interim of all this, you're getting calls from me, my assistant, my processor. Hey, working with Kristina Graham, just want to check in, blah, 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 we need this signed, right? We want to make sure that you're kept up to date as to what's been done next on your file. That's going to be very important. And in the interim of all this, I update all the partners, right? That's going to be your agent. That's going to be the title company, the listing agent, to make sure nobody's left in the dark in the process, because we're a team, even though, your buyer agent represents you, the seller agent represents the seller. Ultimately, we want the same goal. We want you to obtain the property, and the seller wants to offload the home. So I make sure everybody is updated and involved in the process. So now we've issued a loan approval. Congratulations. The underwriter has reviewed your file in its entirety. The appraisal came in great. That's been approved. All your documentation's great. Credit's worthy. Perfect. Now we have the loan approval. Now we're going to go into the closing department, right? So we're closing. What they're going to do is a little bit of a balancing act with title. You want to make sure the numbers that the lender has is accurate and it matches the numbers that the title company has. We're going to go into balancing these figures to make sure everything is the same in both systems. Once that balancing is done, title will call you. Hey, John, just wanted to see what's going to be the best date in order for us to set up your signing. Then from there, you guys go ahead and complete the signing with the title company. There'll be a notary generally there as well. I love to attend my signings. I like to be there for that exciting moment. I generally bring a little gift, but that's going to be a very exciting moment. You pretty much crossed the finish line, and we're just full throttle all the way through for the win. So once you've completed your signing, then what title is going to do is review all your documents, right? This is going to be a process on the back end. Want to make sure all the T's were crossed, all the I's were dotted. The notary had put the stamp on every page that they were supposed to put the stamp on. And if there's anything that needs to be re-signed or that was not legible, that will all be corrected through title, and they'll give you a call if anything does come up. But once that's been reviewed, title will go ahead and submit your file. We'll fund your loan, First of all, we'll fund your loan. Once all the documents have been in, they send it to the lender, we'll fund your loan. Once the funding has been confirmed, then I'm going to submit your file to the county's office in order for it to be recorded. Once the county's office records your file, then hurrah, you're a homeowner, and now the agent, your buyer agent, can release the keys to you. So that's the entire process here. So it isn't as big as it may seem. And we definitely go step by step throughout every single process. I like to go through it with my clients initially, just so they can see, hey, high level overview. And that's exactly what this is. Are there going to be maybe different things and different nuances that come up in every other process? Yes. Some processes are a little bit faster than others. Some buyers are a lot more responsive than others. But yeah, it's pretty much the same nuts and bolts in every process when I sit down with the buyer. So if you have any questions outside of this, please let me know. I would be happy to walk you through this. If you're just ready to purchase a home, all my information is going to be right below. Give me a call. Let's go over your situation. I'd be happy to help. All right.